Starting a business from scratch can feel overwhelming because there are countless decisions to make before you ever earn your first dollar. Many people believe success comes from having a brilliant idea or a large amount of startup capital, but those are rarely the deciding factors. In this video, you will learn how to build a business from scratch with complete guide for beginners. Choose the right business idea. Every successful business begins with choosing the right idea, but the best business ideas are rarely invented from thin air. They usually come from observing problems that people face every day. The first step is identifying a problem that customers are actively trying to solve, because businesses that solve important problems have a much greater chance of generating consistent sales. Once you identify a problem, research whether the market is growing or shrinking. Entering a growing market gives your business more opportunities over the coming years. Next, study your competitors carefully. Competitors are not a reason to avoid a market. Instead, they prove that customers are already spending money. Analyze what they do well and where they disappoint customers. Your business should offer something that makes customers choose you instead. Consider your own experience, skills, and interests, because running a business requires long-term commitment. Evaluate startup costs realistically, so you understand how much money you need before launching. Some businesses can begin with a few $100s, while others require significant investment. Also consider long-term demand rather than short-term trends that disappear quickly. Define a unique value proposition that clearly explains why customers should buy from you instead of someone else. Before making a final decision, list the biggest risks, including competition, costs, regulations, and customer acquisition challenges. Finally, avoid constantly switching between ideas. Many entrepreneurs fail because they chase every new opportunity instead of committing to one idea and improving it over time. Focus, consistency, and continuous improvement are often far more valuable than having the perfect business idea. Validate your business idea. Many businesses fail not because the product is bad, but because nobody actually wants to buy it. Validation helps you reduce that risk before investing significant time and money. Start by speaking directly with potential customers. Instead of relying on your own assumptions, ask about their biggest frustrations, current solutions, and what they would like to improve. Listen more than you speak, because customers often reveal valuable insights without realizing it. Once you understand their needs, test whether they are willing to pay for your solution. People saying they like an idea is very different from someone opening their wallet. Create a minimum viable product, often called an MVP, which is the simplest version of your product or service that solves the main problem. Launch it quickly instead of waiting for perfection. Collect honest feedback from early users and encourage criticism because it shows where improvements are needed. Use that feedback to refine your offer before expanding. Run a small market test using a simple website, social media campaign, or local advertising to measure real demand. Monitor how many people visit, inquire, and ultimately purchase your product. Experiment with different prices to find the balance between customer value and profitability. Finally, determine whether you have achieved product market fit, which happens when customers consistently buy, recommend, and return for additional purchases. Validation is not about proving your idea is perfect. It is about learning what customers truly want so you can build a business around real demand instead of personal opinions. Identify your target customers. One of the biggest mistakes new business owners make is trying to sell to everyone. In reality, businesses grow faster when they clearly understand exactly who they are serving. Start by defining your ideal customer in detail. Think about their age, profession, income level, location, lifestyle, and purchasing habits. The more specific you become, the easier it is to create products and marketing that speak directly to them. Next, identify the biggest problems they face. Customers rarely buy products simply because they look attractive. They buy solutions that make life easier, save time, reduce costs, or improve results. Once you understand their pain points, learn what goals they are trying to achieve and what motivates their buying decisions. Segment your audience into smaller groups because different customers often have different needs. Research where your ideal customers spend their time, whether that is search engines, YouTube, LinkedIn, Facebook, industry events, or local communities. Study your competitors to understand who they are attracting and identify opportunities they may be missing. Create a simple customer persona that includes background information, challenges, goals, fears, and buying triggers. Also understand the reasons customers may hesitate before purchasing. They might worry about price, quality, trust, or whether your product will actually solve their problem. Addressing these objections early makes selling much easier. Finally, avoid targeting multiple markets during the early stages of your business. Focus on serving one customer group exceptionally well before expanding into additional markets. A focused business usually builds a stronger reputation, earns better referrals, and creates marketing messages that feel personal rather than generic. The better you understand your customers, the easier every future business decision becomes, from product development to pricing and marketing. Create a simple business plan. A business plan does not need to be a 100-page document filled with complicated financial terminology. For most small businesses, a simple and practical plan is far more valuable because it helps guide daily decisions. Start by writing a clear mission statement that explains why your business exists and the value it provides to customers. Then establish measurable goals that define what success looks like during the first year. Your goals should include revenue targets, customer acquisition, profitability, and operational milestones. Clearly describe the products or services you will offer and explain how they solve customer problems better than available alternatives. Next, choose a revenue model that explains exactly how your business will generate income. Estimate your startup expenses carefully, including equipment, software, marketing, licenses, inventory, insurance, and operating costs. Build a realistic monthly budget so you understand how much money will be required to keep the business running. Forecast your expected sales using conservative assumptions rather than overly optimistic estimates. Calculate your break-even point so you know how much revenue is needed before your business becomes profitable. Prepare a cash flow forecast that estimates when money will enter and leave the business, because many profitable businesses still fail due to cash shortages. Finally, create a 90-day action plan with clear priorities instead of trying to accomplish everything at once. Focus on completing the most important activities that move the business forward, such as launching the product, acquiring customers, and improving operations. A simple business plan should remain flexible and evolve as you learn more about your market. The purpose of planning is not to predict the future perfectly, but to reduce uncertainty and make better decisions every step of the way. Set up your business legally and financially. Once your business idea has been validated, it is time to build a solid legal and financial foundation. Start by selecting the business structure that best fits your goals, considering factors such as taxes, liability, ownership, and future growth. Register your business according to local regulations and obtain all required licenses or permits before serving customers. Taking care of these requirements early helps prevent legal complications later. Next, complete any necessary tax registrations so your business can properly collect, report, and pay taxes. Open a dedicated business bank account and use it exclusively for business income and expenses. Keeping personal and business finances separate makes bookkeeping easier, improves financial reporting, and presents a more professional image. Set up a bookkeeping system from the beginning instead of waiting until tax season. Even a small business should record every sale, expense, asset, liability, and owner investment accurately. Choose accounting software that matches your business size and future growth plans. Create a well-organized chart of accounts so every transaction is categorized correctly from the first day of operation. This organization will make financial statements much easier to understand later. Review your financial records regularly instead of allowing paperwork to pile up. If your business faces significant risks, purchase appropriate business insurance to protect your assets from unexpected events, lawsuits, or property damage. Building a proper legal and financial structure may not feel exciting, but it creates stability and credibility. It also saves countless hours of frustration when applying for loans, preparing taxes, attracting investors, or simply understanding how your business is performing. Strong businesses are built on organized systems, not last-minute paperwork. Build your product or service. Now that your business foundation is in place, it is time to build something customers are willing to pay for. The biggest mistake many entrepreneurs make is trying to create a product with every possible feature before anyone has even tested it. Instead, focus on solving one important customer problem exceptionally well. Start with a minimum viable product, or MVP, which is the simplest version of your product or service that delivers real value. Launching early allows you to collect feedback before investing too much time or money. As customers begin using your product, pay close attention to what they like, what confuses them, and what they wish was better. Use this information to improve quality step by step instead of guessing what customers want. Pricing is equally important. Set a price that reflects the value you provide while still leaving enough profit to grow the business. Avoid competing only on low prices because that often leads to lower profits and makes long-term growth difficult. Build a professional brand identity that customers can recognize and trust. This includes your business name, logo, colors, messaging, and overall customer experience. Make purchasing your product or service as simple as possible by removing unnecessary steps and reducing customer confusion. Test your product repeatedly to ensure it performs consistently and meets customer expectations. Document your production or service delivery process so quality remains consistent as your business grows. Prepare customer support systems before launch because questions, issues, and feedback are part of every business. Finally, launch confidently, knowing that no product is ever perfect. Successful businesses improve continuously after launch by listening to customers and making small improvements over time instead of waiting endlessly for perfection. Get your first customers. Even the best product cannot generate revenue if nobody knows it exists. Getting your first customers should be one of your highest priorities because early sales provide income, confidence, and valuable feedback. Begin by creating a simple professional website that clearly explains what your business offers, who it helps, and how customers can contact you or place an order. If your business serves local customers, optimize your Google Business profile so people searching nearby can easily find you. Build a consistent presence on the social media platforms where your target customers spend their time. Instead of constantly promoting your product, share useful information, answer common questions, and demonstrate your expertise. Ask satisfied customers for referrals because recommendations from trusted people often produce higher quality leads than advertisements. Network with business owners, local organizations, and industry groups to create new opportunities and partnerships. Create valuable content such as articles, videos, guides, or tutorials that educate potential customers while building trust in your brand. If your budget allows, test affordable advertising campaigns and carefully measure the return on every dollar you spend. Build an email list from the beginning so you can communicate directly with interested prospects without depending entirely on social media algorithms. Always follow up with leads because many sales happen after multiple conversations rather than during the first interaction. Finally, deliver exceptional customer service that exceeds expectations. Happy customers become repeat buyers. leave positive reviews, and recommend your business to others. The first customers are often the hardest to earn, but they also become the foundation for long-term growth through trust, reputation, and word-of-mouth marketing. Manage your business finances. Strong sales alone do not guarantee a successful business. Many companies generate impressive revenue, but still struggle because they fail to manage their finances properly. The first step is tracking every dollar that enters or leaves your business. Accurate financial records help you understand where your money is going and allow you to make informed decisions. Review your cash flow every week instead of waiting until the end of the month. Cash flow tells you whether enough money is available to pay employees, suppliers, rent, taxes, and other operating expenses. Learn the difference between revenue and profit, because generating more sales does not always mean earning more money. Control operating expenses by regularly reviewing subscriptions, inventory, utilities, marketing costs, and other recurring expenses. Build an emergency fund that can cover several months of operating costs, so unexpected situations do not threaten your business. If you sell physical products, manage inventory carefully, because excess inventory ties up cash, while insufficient inventory leads to lost sales. Send invoices immediately after completing work and establish clear payment terms to improve cash flow. Follow up on overdue payments professionally but consistently so money is collected as quickly as possible. Review your financial statements every month, including the income statement, balance sheet, and cash flow statement, to understand your business performance. Finally, monitor important financial ratios such as gross profit margin, net profit margin, current ratio, and debt-to-equity ratio. These numbers reveal the financial health of your business and help identify problems before they become serious. Businesses that consistently monitor their finances, make better decisions, reduce unnecessary risks, and create a stronger foundation for sustainable growth. Scale your business the smart way. Growing a business is exciting, but growth without a plan can create more problems than profits. Many businesses fail during expansion because they grow faster than their systems, finances, and operations can handle. Smart growth begins by standardizing the way your business operates. Every important task should follow a clear and repeatable process so customers receive the same quality every time. Document these processes by creating standard operating procedures, often called SOPs. These written instructions make it easier to train employees and maintain consistency as your team grows. Next, identify repetitive tasks that can be automated. Software can handle invoicing, appointment scheduling, inventory tracking, customer emails, bookkeeping, and many other routine activities, allowing you to focus on higher value work. As your workload increases, hire people carefully instead of hiring quickly. Look for individuals who fit your company culture, have the right skills, and are willing to grow with the business. Once you build a team, learn to delegate responsibilities instead of trying to do everything yourself. A business that depends entirely on the owner cannot scale efficiently. Measure business performance regularly by tracking key performance indicators such as customer acquisition cost, customer lifetime value, gross profit margin, conversion rate, and monthly recurring revenue where applicable. Focus on retaining existing customers because repeat customers often generate more profit than constantly acquiring new ones. Expand your marketing channels gradually by testing different platforms and investing more in the strategies that consistently produce results. Consider introducing additional products or services that naturally complement your existing offerings instead of chasing unrelated opportunities. Most importantly, never sacrifice healthy cash flow for rapid growth. Scaling should increase profitability and strengthen the business, not create financial stress. Sustainable growth happens when systems, people, finances, and customer satisfaction improve together. Avoid the biggest business mistakes. Every entrepreneur makes mistakes, But some mistakes are expensive enough to destroy an otherwise promising business. The first mistake is starting without proper market research. Building a product before confirming customer demand often leads to wasted time and money. Another common mistake is ignoring cash flow. A business can appear profitable on paper while still running out of cash because money is arriving too slowly or expenses are growing too quickly. Mixing personal and business finances creates confusion, inaccurate financial records, and unnecessary tax complications. Always keep separate accounts and treat your business like a professional organization from the first day. Underpricing products or services is another serious error. Low prices may attract customers initially, but they often reduce profitability and make future price increases difficult. Overspending during the early stages is equally dangerous. Expensive offices, unnecessary equipment, and excessive marketing can quickly drain valuable cash before the business becomes stable. Taking on unnecessary debt creates additional financial pressure through monthly loan payments and interest expenses. Borrow only when there is a clear plan for generating a positive return on that investment. Hiring employees too early can increase payroll costs before the business has consistent revenue. Grow your team only when the workload justifies the expense. Ignoring customer feedback prevents continuous improvement and allows competitors to provide better solutions. Expanding too quickly without sufficient financial resources can damage customer service, product quality, and cash flow. Finally, never make important business decisions based on emotions or assumptions. Use financial reports, customer data, market research, and measurable results to guide your decisions. Businesses that learn from mistakes, adapt quickly, and stay focused on creating customer value are the ones most likely to achieve long-term success.